Hey everybody, it's Mauricio Raul here, founder and CEO of Premier Law Group, your premier syndication attorneys. And today I wanted to talk about the answer to the question that I probably get asked the most, and that is, how do I take somebody that I don't know, that I don't have a relationship with, and how do I turn them into somebody that I have a pre-existing substantive relationship so that I can then offer them some of my future deals? Now, for purposes of today's video, I want to assume that you've obtained these names legally, meaning you've got a compliant website, for example, that only talks about your background and your company and doesn't talk about any particular deal, doesn't talk about anything prior, and you've just captured email through that website, or maybe you've gone on a podcast, added a ton of value, again, haven't talked about a deal or haven't talked about prior deals, and you've somehow getting those persons to contact you. And so now you have this individual in your database, but you don't really know them. And so what are the steps that we need to take them from where they are today to where they are having a substantive relationship? And the best way I can describe this is really through this timeline. And there's something I like to call a record date, which is just a date that one of these events happens. And there's really three of them. The first is this date that you meet this person, whether it's over the phone because they found you on a podcast or your website, or maybe you met them at an event, or just however you met this person. There's obviously a record date, and you want to capture that. The second date is obviously the date that you establish that substantive relationship with the investor. So you've taken the steps, which we're going to talk about in a second. So you've met them. Now you've established a substantive relationship, whatever date that is. And then finally, you actually have your offering that you want to show your investor. So the real question is, as everyone wants to know, is how do I go from somebody I met into having a substantive relationship? And fortunately for us, we've had some guidance from the SEC in the form of what's called a no action letter. And a no action letter is just a fancy way of saying there's opportunities for you to actually call the SEC or actually write to the SEC and say, hey, look, this is what I'm planning on doing. If I do this, will you take action against me? And sometimes the SEC will come back and say, no, if you do exactly what you're saying in your letter, we will not go after you. We'll take no action against you. And that's kind of the guidance that we have. And so in this particular action, which is called the Citizen VC no action letter, which some of you may have heard of before, it essentially involved a company that had a website that obviously is public, and it had a specific tab that was password protected. But it acknowledged that through the process, obviously it's a website, so it's going out, it's advertising essentially, that in the process of having that website, that it did actually collect people's names and information of people they did not have a relationship with, but they had some certain policies and procedures in place that they took from the time they came into their world, and they took these policies and procedures and got them to the point where they believe they established a substantive relationship. And so I'm going to go through those. There's about 6 or 7 of them. The first one is you want to provide them with a very detailed questionnaire. And that's probably at the outset. Probably if you're capturing through the website, it's probably an automatic questionnaire you want to have them fill out. But the questionnaire is it's more than simply just having, are you accredited? Are you not accredited? What's your net worth? You're really trying to figure out the level of sophistication of your investors. So you're going to be asking very detailed questions about their income, their knowledge, their level of sophistication, how many times they've invested before, just trying to get a really complete picture of their goals, their investment philosophy, so that you can understand whether they are sophisticated enough to get into your particular deals. The second thing you want to do, according to the SEC, is send them an introductory email just about your company and letting them know sort of facts and circumstances about your company. The third thing, which is probably the most important, is you want to have an offline conversation with them. Most likely a phone call, but certainly if you want to meet them for lunch or dinner or something, but you want to have an actual conversation with them. Again, probably to go over that questionnaire, make sure that you understand what their goals are, their experience, just their level of sophistication. So that's an important step of having 15, 20, 30-minute phone call with them. The fourth thing that you want to do is you want to have a discussion online, via email probably, or maybe through the website, that encourages them to take a look around and ask questions about the investment company, which is your company, your philosophy. Again, you're trying to get as much information for them. The fifth thing you've got to do is encourage them to take a look at your website and check around and so you can see what they're all about. And again, ask whatever questions they have. The sixth thing is actually pulling their credit report. And I acknowledge most of my clients kind of skip this step, and we'll talk about that in a second. But the SEC encourages you to pull a credit report, again, to kind of confirm their identity, confirm that what they're actually telling you is true, and kind of figure out the level of sophistication. And then again, the last one is just to kind of generally foster that type of interactions that would allow you to establish that substantive relationship, get to know them really well. And the SEC really stressed that it's not a timeline. I mean, even though I drew a timeline here, it's not a question of how long it takes you to establish this relationship. It's really more about the quality of the interactions. And so some people talk about this 30-day cooling off period. The SEC says no, there's none of that. It's really about the quality of the interactions where you, from the time you met them to the date that you decided that you have done enough and you followed your procedures, that you have now, on this particular date, you consider yourself to have established a substantive relationship with the investor. At that point, you've got to be very careful because remember, substantive relationship is just one part of that test. You have to have a pre-existing substantive relationship, which means this relationship has to pre-exist the offering. So once you get to this date, it's like, hey, today is the day that I've established a substantive relationship, you want to make sure you can only offer them future deals, right? So if you have a deal that's currently going and you just today established a substantive relationship, you're not allowed to actually offer that particular deal to your investor. You need to offer them the next one, the future one. So it's very important for you to have a really good system for capturing all this information, whether it's a CRM, an Excel spreadsheet, but you want to make sure you understand when you met them, what's the date that you consider you established a substantive relationship because you've gone through these 6 or 7 steps, and then offer them a future deal. And again, this is only for the exemptions that do not allow advertising, right? I mean, if you're relying on a 506C or a Reg A or Reg A Plus, which does allow you to do advertising, this obviously doesn't apply. But if you're looking to do a 506B, for example, which is what the majority of people do, which prohibits you from advertising, and you want to establish a pre-existing substantive relationship with the investor, follows these 7 steps. And the closer you get to those 7 steps, the more assured you are that you're going to be in good shape. The less of those steps that you follow, the further away you get, and you start getting in a little bit more of the gray area. So hopefully that was useful. I'll try and link the Citizen VC No Action Letter below so that you guys can actually take a look at it. But if you follow those steps, you should be good. And hope you found this video valuable. Thank you.